Welcome back to another exciting episode of Chain Train. Today we're diving into some major developments in the cryptocurrency world that are shaking up the industry. From the rise of stablecoins signaling a potential rally to frauds that have cost investors millions, there's a lot happening. We'll also cover regulatory shifts across countries, including how Romania and El Salvador are adjusting their crypto policies. Let's get into it. Andian Medjedovic, a 22-year-old Canadian, has been charged with stealing $65 million in cryptocurrency through hacks on Kyberswap and indexed finance platforms. He exploited weaknesses in the platform's code, manipulating token prices and defrauding investors. Medjedovic borrowed hundreds of millions in tokens engaged in trades to manipulate prices and extracted profits from these exchanges. He referred to himself as a pirate and remains on the run after fleeing authorities in Canada in 2021 when he was also charged with the same crime. U.S. prosecutors in Brooklyn have unsealed the indictment, emphasizing that those who harm investors using new technologies will be held accountable regardless of location. Bitcoin and crypto-related stocks dropped due to concerns over the impact of new tariffs introduced by the Trump administration. Trump imposed a 25% tariff on goods from Canada and Mexico, along with a 10% tax on Chinese imports. Investors fear these tariffs could drive inflation, preventing future interest rate cuts by the Federal Reserve and making riskier assets like Bitcoin less attractive. Bitcoin fell to around $95,000, and stocks of crypto companies such as Coinbase, Robinhood, MicroStrategy, and Riot Platforms dropped by 5% or more. Despite rallies since Trump's election, the tariffs have caused market pessimism, with Bitcoin experiencing its fourth consecutive day of decline. In Ireland, suspicious cryptocurrency transactions have surged, contributing to a record number of 54000 suspicious transaction reports in 2024. This rise is largely driven by reports from virtual asset service providers, which facilitate cryptocurrency transactions. In the past, banks and credit unions accounted for most STRs, but now VASPs have become the largest reporters, surpassing traditional financial institutions. From 2021 to 2023, VASP reports increased exponentially, reaching nearly 24000 last year. These reports are used to detect money laundering, tax evasion, and other crimes. However, the volume of reports combined with an increase in suspected fraud has led to a backlog in Garda investigations. The rise in STRs follows amendments to the Criminal Justice, Money Laundering and Terrorist Financing Act, expanding reporting obligations to include VASPs. Binance Pay has partnered with Xmoney, a Web3 payment provider in Europe, to enhance crypto accessibility. This partnership allows over 20,000 businesses in Xmoney's merchant network to accept cryptocurrency directly, spanning industries like luxury goods, travel, gaming, and public services. It expands Binance Pay's global merchant network to over 3,20,000 businesses. The collaboration offers a faster, cost-effective, and user-friendly payment experience, helping bridge the gap between blockchain and traditional finance. Xmoney operates under EU MiCA regulations, ensuring secure transactions. This growth reflects Binance Pay's commitment to making cryptocurrency more practical for everyday transactions, further advancing global crypto adoption. David Sachs, the White House's cryptocurrency czar, will hold a press conference on February 4th, 2025, to discuss the U.S. digital asset strategy. Sachs will be joined by several key lawmakers, including Senate Banking Committee Chairman Tim Scott and House Financial Services Committee Chairman French Hill. The event will focus on plans to position the U.S. as a leader in the digital asset sector, addressing topics like regulatory policies, innovation incentives, and national security concerns. The discussion comes amid growing debates in Washington on cryptocurrency regulation, including stablecoin oversight and central bank digital currencies. The conference is expected to shape future legislation and regulatory actions, with market stakeholders closely monitoring the White House's stance on crypto policy. In Budget 2025, India's cryptocurrency taxation remains unchanged, with a 30% tax on gains from crypto transactions as per the Finance Act 2022. Transaction fees cannot be deducted, and losses from virtual digital assets cannot offset other income. A 1% TDS applies to crypto transactions with thresholds of Rs 100,000 for salaried individuals and Rs 50,000 for businesses. Crypto income must be reported in ITR2 or ITR3 forms with details on acquisition and transfer dates, costs, and consideration received. Failure to report correctly can lead to penalties. The Central Board of Direct Taxes also offers penalty relief for delayed TDS filings between July 2022 and February 2023 if filed by May 2023. Investors should comply with tax rules to avoid penalties and ensure smooth tax filing. Romania plans to regulate and tax the cryptocurrency market, requiring all companies involved in crypto activities to obtain authorization. Finance Minister Tansos Barna stated that the government currently lacks an accurate understanding of the market's size, but the authorization process will provide clarity. This will apply to companies and cryptocurrency ATMs. The government aims to align with global regulatory standards and also prepare to tax cryptocurrency transactions. The move follows concerns about unregulated transactions highlighted by a police search revealing $7 million in cryptocurrencies. Authorities, including the National Agency for Fiscal Administration, will be ready to monitor transactions, including those funding political campaigns, by the upcoming spring election. Experts estimate Romania's crypto market could be worth hundreds of millions of euros with up to 600,000 investors. The stablecoin market has reached an all-time high of $204 billion, signaling potential growth in the cryptocurrency sector, according to CryptoQuant. This increase of $37 billion since November 2024 is largely attributed to the rise of Tether's USDT and Circle's USDC. Stablecoin liquidity has surged, with transfer volume surpassing Visa and MasterCard combined in 2024, although bot activity accounted for 70% of this volume. The market for yield-bearing stablecoins has also grown significantly, contributing to a 414% surge in tokenized treasuries. The increase in stablecoin deposits on centralized exchanges, particularly USDT, is seen as a key factor in driving liquidity for crypto trading. This growing liquidity is expected to play a crucial role in fueling the next cryptocurrency rally, as historically higher liquidity correlates with market price increases. El Salvador has amended its Bitcoin law, removing Bitcoin's status as legal currency but retaining its status as legal tender. The legislative changes passed on January 29, 2025, make Bitcoin use voluntary, unlike the previous law, which required businesses to accept it. Bitcoin can no longer be used for tax payments or settling government DTBs, and the government will reduce its involvement in the Chivo wallet. These changes align with an agreement between El Salvador's government and the IMF, which had issued concerns about the risks of Bitcoin due to its volatility. Despite these adjustments, El Salvador's government remains committed to Bitcoin, continuing to hold and expand its Bitcoin reserves. Recently, the country purchased more Bitcoin, bringing its total holdings to 6,055 Bitcoins, valued at approximately $612 million. Investors in Telangana, India, have lost approximately R600 crore in a cryptocurrency fraud. The scam came to light when victims from towns like Karimnagar, Jagtialmetpally, and Korutla filed complaints with the Director General of Police Office. The accused Ramesh Good allegedly promised high returns on cryptocurrency investments and collected large sums from investors, leading to significant financial losses. Authorities are investigating the case and working to apprehend the fraudsters and recover the lost amounts. This incident highlights the importance of caution and thorough due diligence in cryptocurrency investments. That wraps up today's Chain Train. Stay tuned for more updates on the evolving cryptocurrency market. Be sure to follow, like, and share the episode, and don't forget to subscribe so you never miss an update on the latest in blockchain and crypto. Until next time, keep riding the crypto wave.